Hello everyone, and thank you for joining us today, and welcome to this specialist trading presentation. And for those of you who aren't familiar with specialist trading, we feel we are your premier source for online education in trading virtually every market, from the stock market to the futures markets to the Forex markets. We provide you the tips and techniques and the information you'll need to trade with the specialist edge. Now, to give you a little background about myself, for those of you who have not attended my presentations before, my name is Stephen Primo. I am the president and founder of Specialist Trading, and I have been trading for nearly 36 years. Come this July, it'll be 36 years. I started my trading career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist for Donaldson, Lufkin, and Gen Rep. Now, I traded through just about every market environment you can think of, from choppy markets to quiet markets to really extremely volatile markets to straight up markets to straight down markets. I traded through the crash of 1987 and then the great bull market that followed after that. I left the floor in the mid-90s to pursue my own trading, also to manage money. And from then on, I virtually traded just about every and anything you can imagine. And in the, I would say roughly about 7 years ago, I was asked to be more of an educator, and for several websites, I was the director of education, teaching their systems and their products. And roughly about 3 years ago, I started just teaching what I personally trade myself. These are the actual strategies and the methods that I incorporate in my own personal trading, because I had a number of students asking me to teach them to trade the way I actually trade. So that's when I started Specialist Trading, which is all of the information and all the strategies and tips and techniques that I've accumulated in my 36 years of trading. Now, what we're going to be talking about today is the right way to trade tops and bottoms. And I think this is extremely important, especially in this current market environment. We've seen the stock market go straight up. We've seen some other issues such as Apple go straight down. And I'm going to show you a great way to trade, and in my opinion, the right way to trade tops and bottoms, because I feel the majority of all traders actually trade tops and bottoms, trying to see when something is topped out and to go short, and trying to see when something has bottomed out and to go long. But before we begin, I ask you to please take a moment to view our disclaimer. I'm going to show you a lot of performance results looking back at these techniques and showing you how to actually trade, giving you an entry technique to use using this particular method. But please remember that we can in no way guarantee that any of the results I'm about to show you will be repeated in the future. We're required to show you this disclaimer. So please take a moment to view our disclaimer, and then we shall begin today's presentation. Now, for those of you who are asking, I know a lot of you want to know if this is being archived or recorded. Yes, it is. And I will give you an email address as well as a phone number at the end of the presentation where you can request a copy of this recording. Now, also, for those of you who are new to my presentations, you'll know that I love to answer each and every question that you may have. I love talking with my members and students and making sure that they totally understand the tips and techniques I teach. But at the same time, during my presentations, I really like to wait till the end of class to answer any questions. It seems like the webinar seems to flow a lot easier that way, and many times if you kind of wait for a slide or two, your question will be answered. So I'm asking as a favor, we have a fairly large crowd here. If you have any questions, and this won't be a very long presentation, you'll get to see this technique real simple and real easy, just about a matter of 15 or 20 minutes. But if you happen to come up with a question during the presentation, please write it down or try to remember it, and we'll spend the last 10 or 15 minutes going over questions. Also, if you happen to come up with a question once we've concluded today, don't worry, you didn't miss your chance to ask me anything. As I stated, I will leave you with a phone number as well as an email address where you can contact us and ask us a question perhaps about this particular webinar, or also maybe about how to get the archived, or possibly how to become a member of our website, specialisttrading.com. Okay? All right, so why don't we begin? Now, as I stated, we're going to be talking about tops and bottoms, and I like to tell my students that even though I've been trading for 36 years, a lot of people think that because you're a specialist, and because once you became a specialist on the floor, where you basically were making markets for about a minimum of 50 to 60 stocks, that you had a license to steal, that trading was easy, and that you had it all figured out. But I always come up clean with my students and members that the first year or two I struggled tremendously with my trading. In fact, I didn't know how long I was actually going to be a specialist, how much longer, because I couldn't seem to get things going. I would have 2 or 3 fantastic months or 2 or 3 fantastic trades, and then I would give everything back, possibly on maybe the next trade or the next month. And it continued to have this kind of roller coaster effect in my profit and loss, where I would be doing fantastic and then I'd give it all away. And so after a year or so, I really had nothing to show for my hard work, and I thought I was doing all the right things. I was subscribing to a lot of newsletters, I was listening to the news, I was getting involved in the financial reports that were coming out, I knew a lot about earnings, I had tons of technical indicators I was following, but all the things that were designed to make me successful were actually getting in my way. So it wasn't until I came in contact with a few elite floor traders, these were specialists themselves on the floor, that my trading turned around, and that's when I was able to become consistent. So that's really my goal, and that's my goal with teaching you in these short webinars that I give twice a week, twice a month, or to all my members of my website, Specialist Trading, is that I'm really, my main goal and my objective is to teach you how to trade with the Specialist Edge. The same way my mentors taught me and turned my trading around, that sustained me for this past 36 years, that's what my goal is for all of my members and for all of the people in attendance today. A lot of people who have come to my webinars will know that I'm not so much really about selling my product. I spend the last 5 minutes maybe talking about the website. The majority of my presentations, I'm just teaching you and trying to give you a tip that you can actually apply as early as tomorrow to your current trading plan. So you really don't have to purchase anything to use the knowledge that I share with all of you in my presentations. So that's my goal. My goal is to teach you how to trade with a Specialist Edge. Now, all of our members and all the people that have joined Specialist Trading, they all are privy to the strategies that I trade, and they're all also privy to nightly signals when they are generated in either the stock, Emini, or the Forex markets. So even though we generate and provide our members with signals, remember, we're really trying to teach you how to spot these on your own, so that once you understand the process behind all of our strategies and techniques, you'll be able to spot a signal on your own and then not have to worry about whether an email was sent out to you or whether you went to the website and a signal was posted. You'll be able to see it on your own, and this will sustain you hopefully for the next 20, 30, even 40 years down the road. Okay, so let's get some knowledge today, and we're going to talk about the right way to trade tops and bottoms. And the reason why I say the right way is because I would venture to say that the majority of all traders on the planet, in the known world, try to pick tops and bottoms. It's what we've been taught. We've been told that something has gone up too high and it's time to sell it, or something has gone far too low and it's time to buy it. And as I stated, this was the way I used to trade when I first started trading on the floor. And this would work 9 times out of 10 until the 10th time it didn't work anymore. And guess what? Everything I made in those 9 previous trades I gave away. And I was right back to where I started. I had nothing to show for all my hard work. So obviously, I was trading tops and bottoms incorrectly. So the right way to trade tops and bottoms is simply to go with them. Okay, and that's what I want to share with you today. So what exactly do we mean by going with the tops and the bottoms? Well, let's start off with stocks. And remember, once again, I just want to remind you that if you happen to have a question, please, I'm not even going to look at a question box right now. I'm going to focus more on the charts I'm going to be showing you. So just kindly write the question down, and in about 15 or 20 minutes, we'll go over all the questions you may have, okay? All right, so let's start out with stocks right away, and let's see how most people, just to give you a brief, not a grief, but a brief background on how most people, I would venture to say the majority of all people, trade tops and bottoms. Let's start out with stocks. And when we're looking at stocks, here's a great example, Apple. Okay, this chart is going back to roughly December up until about a week ago, so it's fairly current. And as we can see here, we have a standard slow stochastic oscillator plotted on the bottom. When people are using tops and bottoms for their trading technique, the majority of people like to use an overbought, oversold oscillator. This is telling them when something is too overbought, you can short it, and something is too oversold, so you can buy it. And once again, this will work fine for a while. Let's look at this example at the end of the year, December coming into January. As we see here, we have the oscillator here, the slow K and the slow D, the 2 lines. And the general thought is when you're in an oversold condition below the threshold right here, and anything below that is considered oversold, you want to see these 2 lines cross. And when they cross, that's your buy zone. Conversely, when you get into the overbought zone, which is over this threshold right here, which is roughly at 80, the bottom being 20, but when you're above 80, when these 2 lines cross, that's your overbought threshold and you want to sell now. Okay? And as you can see, if we look back in December in Apple, this would have worked just fine. You would have actually had a signal to go long here, an overbought signal, or I'm sorry, oversold signal, and you would have purchased and you would have had a nice little gain there. And then you would have probably, most likely, like most people, held and waited for a price to go into the overbought scenario, in which case you would have exited your long position and then gone short. And guess what? It's a great trade. It's a great decision you made because Apple went straight down. So this worked fine. You had two great trades, and now guess what? The oscillator is now moving into the oversold territory. So it's time to jump back into the water here, and let's get back into the pool and go long. So here now is your buy scenario. You would have purchased Apple again, hoping for it to go up. And guess what? It sold off right at the beginning, but it's starting to look good. In fact, the oscillator is starting to get up into that overbought territory. So you're holding on and you're figuring like, well, the first few weeks were tough, but now things are going great. So you hold on to the position, and guess what? Runs out of steam. At this point, you have a loss. But you had two good trades at the very beginning of the year, so you got some cushion here. You got some money in the bank. You've cut up on some of your profits, but you still have some money left. And you know what? We're back down to oversold area again. So let's jump back in again. We're going to the well once more time, and we're going to buy, and we kind of go sideways, and we go lower. Now, if you have any money left, well, you're going to buy once more, okay, because we are still in oversold area, so you want to go long, and as you can see, you've just given away all the profits you made in the first two trades, and now you're holding on to long positions, and you have a loss now. You have nothing to show for the nice trades you had at the beginning of the year. So here it is, beginning of February, and you have a loss now. I'm sure this probably sounds familiar. I know this is the way I used to trade, as I stated, and I didn't know what was wrong. This is what was taught to me. We were always supposed to be looking for overbought, oversold areas. Why didn't this work? Well, this is just an example in stocks. Now, the same concept, the same process will transfer over into the Emini S&P, probably even more. Let's look at a pretty current chart going up to last week. We have, once again, a daily chart of the Emini future, and we have the stochastic, the very basic slow stochastic here, overbought and oversold thresholds of 20 and 80, and we have the two lines here, the slow K and the slow D. Once again, when we're in overbought territory, when the two lines cross over, that's your signal to sell. And then conversely, well, we never got into oversold here, but we can see right off the bat, this would have been a very nice trade. You would have shorted right here and could have gone down. Well, I guess we just did pass into the oversold area, so if you would have taken this trade, guess what? You had a really nice trade. So once again, this is coming into this year, coming into January, there were two really nice trades using an overbought, oversold oscillator. Once again, probably the way the majority of all traders like to trade. Now here we look, the first week in January, the two lines here, the slow K and D, are in the overbought territory, and they are crossing over, which signals another sell signal. You know, it worked fantastic the first time. Let's get back in again. So let's go short. And what happened? We went straight up again. Well, the two lines are crossing over again. Well, let's double up. Okay, it didn't work the first time, but maybe it's going to kick in the second time. Guess what? It continues to go higher and higher. Now you're getting margin calls. Now you're long more than you, or I should say short more than you thought, and you've given away just about all of your profits you made in the first two trades. But you continue to hold on, and then by last week, before we had this sell-off in the last couple of days, you're virtually getting killed, and you probably had to sell out with a nice loss, and you gave everything back. Okay? Once again, overbought, oversold trading is akin to this type of experience here. This is what you'll see a lot. Now, if you're a Forex trader, well, you're not immune to this either. This is going to happen in Forex markets as well. Here's an example in the dollar-yen. Okay, this is coming in once again at the end of the year, going into January of 2013. As we can see here, we have the oscillator, the stochastic oscillator, and price at the very midpoint of December crossed into the overbought area, plus the two lines crossed. So this is your standard signal to go short. Nothing much happened. We kind of went sideways, but then we crossed over again. So you're given another chance to short more, or at least you hold on to your short position. And it goes even higher. I thought this overbought, oversold stuff was supposed to work. Well, let's jump in one more time. Let's sell another contract. Let's go short the dollar-yen. And then as you can see, by the middle of last month, or even now, if you still held on the position, you've got a major, major loss, okay? So why didn't this work? As we stated, the majority of all traders trade this way. We're constantly sitting in front of our computers and we say, oh, that stock has gone down far too low, or it can't go any higher. There's no reason it should be this high. Same thing with the Emini futures, same thing with the Forex markets. We always get in our own way by telling ourselves that all the indicators or all the news or some guru, some trading guru I subscribe to is telling me it's too overbought or too oversold. Well, as I stated, I used to trade this way and I had nothing to show for it after the end of the year until my mentors sat me down and probably explained one of the most important lessons that I had ever heard before. And what they said was, Steve, there is no such thing as overbought or oversold. Okay? And I really want to make sure that you fully understand that. There is no such thing as overbought or oversold. Any equity, any contract, any future can go as high as it wants to. And we've all seen stocks in the past go to zero, and we've all seen futures continue to drop and drop where you get margin calls. So they can just go as long as they want. So what does this tell us then? Well, the right way to trade tops and bottoms, as we stated, is not to try and pick a top or bottom to trade off of, but to go with it. So we want to go with them. Now, what exactly does this mean, going with them? How am I going to change my way of trading around if I'm going to be going with the tops and bottoms? Well, let's look back at our examples once again and see how we could have fared a little better trading with this different way of approaching tops and bottoms. Let's look at the example in stocks again. Let's look at Apple. All right, we have the same chart again we saw at the beginning of December. We have the overbought, oversold sightings here with the stochastic. And this is where we would have purchased and sold, and we've had a nice trade. And as we can remember here, we would have gotten back in again, and then it would have wound up disastrous, okay? So how do we want to change our approach, and how do we want to go with these tops and bottoms? Here's what you want to do. You want to get rid of thinking about where you're going to be buying if something is overbought or oversold, and get rid of all these little areas in which to sell at the top and buy at the bottom, and plot one more indicator, one more tool, and that's the 50-period simple moving average. We call this, at Specialist Trading, we call this the buy-sell line. And it's extremely powerful, it works tremendously well, and it's so simple. But regardless of what time frame, I don't care if you're using this approach on a 5-minute chart or a monthly chart, plot a 50-period simple moving average on every chart you're trading. And then ask yourselves, where is price in relation to that 50-period simple moving average, okay? Now, as we can see here in this example of Apple, once we plotted the 50-period simple moving average, it's obvious that all the price is below. So, if price is below, this means we are only going to be going short. We're not considering buying at all. So right away, we don't even have to consider, well, where would we go long? Well, where's a bottom? We're not thinking about bottoms. We're thinking about only selling if price remains below the 50-period simple moving average. So where are we going to sell then? How do we go with these tops and bottoms? Well, we look back at our oscillator, and since we're selling, all we want to be aware of are the times when the oscillator is in an oversold area, such as right here, and right here. Okay, so we have 4 areas here in the last 3 or 4 months where we were in a so-called oversold area. We were below the oversold threshold. Okay, so rather than thinking about buying, we want to look for some type of pivot or some type of bottom that was made in this oversold area. So as you can see right here, we have a low, followed by a lower low, followed by a higher low. So this was a pivot that was made in the oversold area. So this would be a low. This would be another one right here. This would be another low right here and right here. So we can mark these as these pivot lows that were only made during an oversold area. See, we have a pivot low right here, a low followed by a lower low followed by a higher low, but it was made when the oscillator was still in between the overbought oversold. So we're not considering that. We only want to look at these extreme pivot lows. And so how are we going to trade these? Well, these are the areas. Once we come back to these levels, we are going to sell. And as you can see, you would have sold here, sold here, sold here. And I know right now that Apple, this chart was taken about a week ago. Apple is actually currently lower at the point. So you would have gotten short again. So this is another profitable trade. So you would have had 3 profitable trades here going on in Apple all the way back. Now, you don't have to take every trade. You could have gone short just one of them and just held on. But this is how you're going with the market, as opposed to try and stand in front of a downward trend and say, it's stopping and I'm going to pick a bottom here. Once again, that'll work for a short amount of time, but the times it doesn't work, you're going to literally get run over. Let's look at our example in the E-mini. Okay, applying the exact same example. We're looking at the E-mini chart at the end of the year, and we had a couple of nice trades using a standard, the typical overbought, oversold type of way of trading, until it doesn't work. Remember, we're looking for consistency in all of our trading. We're not looking for something that works until it doesn't work anymore. We're looking for something that has some measure of consistency in it. And as you can see, if you had tried to pick tops this entire past 2 months in the E-mini, you would have most likely lost everything before it finally topped out about 2 days ago. So we wouldn't have been concerned about waiting for that, because you most likely would have lost a ton of money, and then you would have missed the move entirely that's happened in the last couple of days. So how would we have gone with this overbought, oversold type of technique? Well, once again, we totally forget about selling any tops. We apply a 50-period simple moving average. Okay? We ask ourselves, where is price in relation to the 50-period simple moving average? And it's obvious that price for the majority of here in this chart is above. So if price is above, this means we're only looking to go long. So we're not even going to consider picking a top in the E-mini. We're not even going to think about it. All we're thinking about is going long the E-mini. So how would we use this top and bottom technique? Well, once again, we look at the oscillator, and we only want to monitor, since we're going long, the areas where it is so-called overbought. Okay, so in this one spot right here, and then right here for the remaining, for I guess all the way from December up until the first or second week in February, it was in the so-called overbought territory. Remember, we're not looking to sell anything that's overbought, supposedly. We're looking to go long when it hits overbought. This is a totally different way of thinking. We're turning our way of thinking around. And once we see what these areas are, we're looking for a pivot high, meaning that we have a high followed by a higher high followed by a lower high. And if we look at that same concept where all the pivot highs were made in this so-called overbought zone, we have specific areas right here. So at these areas, once we reach them, as long as price was still above the 50-period simple moving average, this is where you would have entered and gone long. So do you see how from the beginning of the year, how much you could have made simply by going long the E-mini as opposed to try and pick a top? Okay, I know of a lot of traders that have literally lost their shirts this past month trying to pick a top in the E-mini, and finally they ran out of money, or they just gave up. They didn't want to get hurt anymore, so they gave up, and then they entirely missed the move this last couple of days. Let's look at the example in the Forex. The same principle applies, the same process. We're simply going to look at the same chart, and rather than say, well, we have an overbought area here, let's start looking to go short. Once again, 99.9% of people think this way. But we don't want to do that, because we know basically this is a recipe for disaster. It'll work for a little while, once again, until it doesn't work anymore. So we don't want to use the same way that we've been taught. For some reason, people have been led to believe that this works. What we want to do is get rid of these areas in which to go short. We want to apply the 50-period simple moving average. And even though this chart doesn't go back as far where you can see it, it's safe to say that all price was above the 50-period simple moving average going back about 4 months. So this means we're not even going to consider shorting the dollar yen. We would have never even dreamed of picking a top. We're only going to think about going long the dollar yen. So what we do is we look for all those areas where we have a supposedly overbought condition, where the oscillator is above the overbought threshold. And once we see that a pivot has been formed in those levels, those were our buy spots. We have to see that price trades there or through there again, and that's where we just simply jump on board and get along. Now, don't you think you would have much rather had used all these buy signals to go long in the dollar yen as opposed to selling it? And you'll see this with charts. It doesn't have to be this. It can be another stock. It can be, if you would have looked at something like Facebook when it first came out, don't you think it would have been nice to be shorting Facebook when it continued to drop lower and lower last year, when everyone thought it was going to be a $50, $70 stock? You could have continued to short it all the way it made new lows. Okay? So this is a great technique, and it especially works well when you hit these major moves, because you're on the right side. Remember, we're not trying to pick tops and bottoms. We're trying to go with them. So, as my mentors taught me, The one thing you have to do is turn your way of thinking around. It's kind of these mental gymnastics. And I know we've been taught that if something is overbought, we've got to sell it. If something is oversold, we've got to buy it. I know personally just as well because I use those same methods and techniques, and I traded that, but for the first year, I thought I was going to lose my job as a specialist because I was not making any money. I get this false impression, just like the slot machines, that they let you win just enough to think that you're doing okay, but over the long time, you look at you really and see that you haven't made any money at all. In fact, you've been putting more in than you've been getting out. That's the way trading tops and bottoms is. It gives you this false impression every once in a while that you're doing well because one will work. But over time, it's really a recipe for disaster, and you're giving a lot of your trading money away. So please remember, there is no such thing. Take it from someone who's been trading for 36 years. There is no such thing as overbought or oversold, regardless of which market you're trading. All right, so what is the lesson learned after this presentation today? What I want you and what should you go away with? Never, ever try to pick tops and bottoms, okay? It really is a recipe for disaster, and I know this firsthand. That's why I gave up on it roughly about 30 years ago. Never, ever try to pick a top or bottom. I know there are a lot of traders that make very good money trading tops and bottoms, but they learn something or they see something that the majority of all traders can't see or can't learn. We teach at Specialist Trading things that are very simple and very easy to see right in front of you, as I just shared with you right now, so that you can understand the process in a matter of days. But many people try to trade tops and bottoms and they never seem to get it. Why? Because there's no consistency in that way of trading. Now, points to remember. I just showed you this technique, but remember, this is not a full-fledged strategy. Okay? I know a lot of you are probably, biting your tongue and saying, boy, I want to ask him a question. Where do I place my stop? Where would I exit? Well, what if I had been going long the market, the E-mini, I would have gotten killed these last 2 days. These are not strategies. This is just an entry technique. In order to have a full-fledged strategy, you have to have knowledge about where to properly place your stop. You also have to have exit signals, okay? And they can be aggressive or conservative. And lastly, you have to know about money management. You have to know how many contracts or how many shares to trade according to your account size. These are all the things that we teach you at Specialist Trading. If I could spend the last few minutes just talking about what we provide for you, what our goal is. As you can see here, this is the homepage of my website. We have courses in stock trading, E-mini trading, and Forex trading. Now, each separate course comes with upwards of 10 separate and distinct strategies for trading those specific markets. If you want to be an intraday trader trading stocks, we have courses for that. If you want to be a long-term trader trading Forex, we have courses for that. If you want to be a choppy trader and trade tick charts in the E-mini, we have a strategy and a course for that. So we have different strategies fit to meet your trading style, your trading persona. Okay? And each of those strategies, we go into detail, specific detail about where to place your stop, where to place your exits, and where to know more about money management and know about different sorts of entries, how to trade aggressively and how to trade conservatively. In fact, here's one of probably our most, I would say, popular strategies for trading in virtually all of these different markets. It's called strategy number 4 because it transfers over so well into not only stocks but the E-mini market, ETFs, and the Forex markets as well. Now, if you decide to become a full member of Specialist Trading, you'll get upwards of 10 different courses. But we also provide our members to purchase individual strategies. So they don't have to spend a lot of money. They can purchase something very inexpensive that will have this level of consistency. Now, strategy number 4, as I said, is one of our premier courses because it transfers easily onto every market. In just a few seconds, I'll show you some actual signals that we had with strategy number 4 at the last couple of weeks. But should you decide to become a member, you get instant course access. You don't have to wait for anything. You don't have to wait for anything to be shipped or mailed. All our courses are done online. It comes with detailed instruction, 5 online videos. I tell you, as I stated, all the entry points, all the exit points, and all the stop points. And not only do I do that, but you are provided yearly signal alerts. So for a year, we will provide you with a signal alert. Whenever a signal has been generated, you will either get an email at night or you can go to a private, a password-protected website which shows you where a signal will be for the following day. This also comes with weekly video trading lessons, such as the trading lesson I'm giving you now, different tips and techniques to elevate your trading. Many of the Metastock users will get a free add-on, so you can start trading strategy number 4 and see where the arrows are giving you buy and sell signals on your own chart. And you get access to my personal emails. You can email me a question virtually any time, night or day, and I'll answer you as soon as possible. Most of the time within 24 hours. Many times you'll be answering me during the trading day, asking me, and I'll answer you within 5 or so minutes, so you can see how the trade is unfolding. Now this course, which is fantastic, is extremely discounted at $695 in itself, but we're also discounted it for the attendees today down to $495, an extra couple of $100. But this is for a limited time only. Now, let me just show you a couple of the signals that were provided this last month, just using strategy number 4. Now, Facebook has gone into a nice sell-off lately, but in the middle of January, before it went into a sell-off, we issued all of our members a buy signal. Okay, and so you had a really quick, nice buy signal in Facebook that could have generated you some nice cash had you been trading stocks. We also generate intraday signals for the Emini. Now, this was also a couple of weeks ago, or about 3 weeks ago, in the end of January, when the market was moving higher. If you're trading a 10-minute chart, these are all the buy signals that would have been provided for you using strategy number 4. Not only works on the upside, here's a 10-minute chart of a sell signal that worked using the Emini strategy number 4 technique. Also, we provide signals for the Forex market traders. Here's the Euro-Yen, another buy signal that was issued on the 9th of January, and you see here it went from 115 roughly to 123, so that's about a nice, I would say, about a nice 800 pip gain. So this is an extremely great trading strategy to have because of its consistency. It really transfers over well into all the markets, and at the same time, it's extremely simple to use. Once again, I'm just showing you where the entries and exits would have been here, but we provide you with all the other details of these strategies. All right, as promised, we are at the question and answer portion of the presentation. Now, if you're interested in becoming a member of the full suite, getting upwards of 10 different strategies, you can contact us at 310-844-7220. You can speak to Don Jans. He's our senior sales representative, and you can email him at donjans@protraderstrategies.com. The reason why we have protraderstrategies.com is they're our sister site. We've teamed up with ProTrader Strategies, and they sell all of our individual strategies as well. So, lots of ways to get more information, and now I want to thank you all for waiting. I'm sure many of you may have had questions. I'm going to open up the question and answer box. And also, I just want to also mention that this is being archived. So if you happen to come in late, or if you happen to have missed a certain section, or maybe were disconnected, don't worry. You can use the email address there or the phone number, and we will send you out a video of this. Okay, let me look at a few questions here. Most of you are asking, will this be indicated? What is the lower indicator? Greg has asked, what is the lower indicator? The lower indicator on the charts that I use is just your standard slow stochastic overbought, oversold tool. Okay, it's just your standard. It's probably the most standard oscillator used today by traders. It's got an overbought threshold of 80 and an oversold threshold of 20. Okay, that's all I was using. And many people, yes, it's a 1533. It's a standard stochastic parameters. Ken says, hi, and thank you so much for the free advice. What settings do you use for the oscillator of your charts, overbought, oversold? Once again, yes, this is just a standard, any slow stochastic average setting. The only thing I can just say is what I was using here was an overbought, oversold of 20 and 80 thresholds, okay? But basically, it really doesn't matter if you're using a stochastic. You can use this on any other overbought, oversold oscillator. Anything that you've been taught that says we are now in overbought territory, that's where you want to look for those little pivots to be formed so that you can jump on board and go with them. Any indicator, doesn't matter, that tells you now we are in oversold territory, that's when you want to use those bottoms to get short. Okay, so it really doesn't matter if the stochastics could be the RSI, it could be any other oscillator. But we do not use overbought, oversold oscillators at specialist trading. We use different oscillators, but as you see, kind of with more advanced different types of techniques rather than the standard way. We don't use the conventional wisdom the way most people use them, okay? And as you can see, remember, once again, I didn't give away the full strategies and such because, you know, it would entail telling you where to place stops. It would entail telling you where the exits are. And those techniques and methods are reserved for our members. So once you become a member, you'll be privy to all the different stops and techniques we use. And you can mix and match to to make your own strategy. So you can use this technique and then use one of our aggressive stop techniques or one of our conservative stop techniques, or you can use a conservative exit technique or a conservative or aggressive exit technique. This is the beauty because we really want to make sure that everything fits your style. I've often tell this story that when I first started trading on my own in the 90s, I had someone who wanted to learn how to trade. And so they came to my trading desk and sat with me for a week or two, and I taught them exactly one of the techniques I was using to intraday trade the markets. And by the end of the few weeks, they sat with me every day. They knew exactly where the buy signal was, where the sell signal was, and they knew exactly how I traded. So time went for a while, and this person went back to trade on their own, and I called them up about a month later and said, how have you been doing? I've been doing great this past month. I wonder if you've had success as well. And they hadn't made any money. In fact, they had lost money. And I said, but I don't understand. You took the same signals. We went over the exact same signals. They saw the same signals, but it just wasn't the same thing for them because they were trading something that I traded. In other words, you can't teach someone to swing the bat the exact same way you swing it. You can't teach someone to to shoot a basketball the same way you shoot it. You've got to fit your own style. And this person just felt out of their niche, not being able to trade their own method. So that's what we teach. I promised myself that after this, no one can emulate exactly the way another trader trades. That's why we don't believe in chat rooms or trading rooms at Specialist Trading, because they're more like crutches where you want to just trade exactly the way the person or the educator is trading in the room. And we don't really believe in that. We feel that everyone has their own specific way to trade. You have a standard foundation, but then you need certain different things to make it fit your own, and that's what I provide you. All of the tips and techniques I've accumulated in the past 36 years, I share with you, and then you can pick and choose which ones best fit you, okay? So that's one thing I really, really want to stress. Don't feel that anyone should ever trade the exact same way someone else does. So if you're looking for an overbought, oversold tool, I can just say that it really doesn't matter what indicator you're using, just as long as if something is telling you it's overbought, that's where you want to look for these pivots to go long. You want to actually do the opposite. If something is telling you it's oversold, that's where you want to look for these pivot lows to go short once they're broken. And I would really stress and suggest to everyone that's attended today to pick a chart. Go, once this is concluded, look at a bunch of charts, put an overbought over oscillator on the charts, and remember to add that 50-period simple moving average. That is probably the most important tool you'll ever use. And add that, and then try and see how this method works and if it would have worked for you. Okay? Okay, let's get to another. Frank asks, are there any chance to have a money-back guarantee? It is not for me. It would create more of a win-win for both. Thank you, Frank. This is probably the most asked question for a money-back guarantee. Frank, we do not offer money-back guarantees, and the reason why we don't is because once you become a member, you are privy to everything. In other words, you're getting 36 years, everything that's taken me 36 years that has sustained my trading, you now have access to. Now, we know that there are a number of traders that have taken the course and they've wanted money back because actually what they want to do is say, well, I've gotten everything now I can basically get this for free if I say I don't like it. And we really don't want to have that type of relationship with our students. We feel we are providing you with something that will sustain you hopefully for many years down the road. These are the same things I use. And it wouldn't be fair to the people that have already paid that we would tell someone, okay, you can get your money back. So I think if you're insecure or if you're thinking that, well, how do I know how to trust, I think the best thing would be to do, and I totally understand that feeling, but the best thing would be to do a Google search on either Specialist Trading or on myself, Stephen Primo, and just see what past members and students have said about our company and about myself. And you'll see that we're very reputable. You really can't find a lot of people that are unhappy with what we've taught and what we've provided for them. Now, just the examples I showed you alone in the last month would have provided you a lot more profit to buy the Strategy Number 4 course maybe 4 times over. So our methods are extremely simple and at the same time extremely inexpensive compared to a lot of other strategies. So to answer your question, Frank, no, I'm sorry, we do not provide that. But if you're insecure or if you're doubtful, I would suggest doing a Google search and see if the educator, if there are any claims against the educator. And I think you'll find that what's out there is, for talking about me is highly reputable and that we really haven't, most of the people are very satisfied with the products we've given them, okay? All right, Jay asks, would you speak of the daily signals again? Oh, sure, Jay. Now, all of our strategies work in every time frame. Okay, so let's say, for instance, you purchase strategy number 4. I don't want you to think that, well, I don't trade daily bars, I trade 5-minute bars. We teach you how to apply strategy number 4 to a 5-minute time frame. It's virtually the same rules with just maybe a few minor things, but it's the exact same things. You're still applying the same indicators. You still have about the same 5 rules, and that's about it. We just provide you with different ways in which to trade those different environments, but really nothing changes that strongly. So the nightly signals are for those traders who trade daily bars, and what we do is the night before we issue an email. I'll just give you an example. Like tonight we had a signal in the Emini tonight. Okay, before I gave you this presentation, the reason why I was a minute late is because I was sending out an email to all of our members that we had a certain signal in the Emini for tomorrow. So that if you were trading on a daily basis, you would be getting that signal. Now you don't have to take it. Let's say you only like to trade 5-minute bars. You would still have the privilege of seeing a signal telling you whether to go long or short, either a stock or the E-mini or the Forex markets the next day. And in those daily alerts, we tell you where to buy, we tell you where to sell, and we tell you where to place your stop. So we give you all the information, but remember, our goal, as I stated in the beginning of the presentation, is to teach you how to trade with the specialist edge. Okay, so we're not trying to just force feed you signals and say, okay, just take it. Don't worry about whether it's based off of or whether it's going to work or not. Just simply go long here, go short here. Now, I want you to understand the process, because ultimately, I don't want you to rely on me giving you a signal. I want you to be able to see it before the market even closes. Okay, so that's really what it's all about. Remember, if I'm teaching you, it's because I want you ultimately to get at that same level. Okay, I hope that answers your question, Jay. Any more questions before we sign off? Remember, this was a great technique. You can start using this as early as tomorrow, but I would suggest paper trading and just going through a couple of examples tonight just to see how it works for you. We have a number of other techniques that are entirely different way of trading as opposed to what I just showed you. Now, as I stated, I give these free informational webinars probably about twice a month, maybe 2 or 3 times a month, and each time I try to give you something different so that you'll elevate your trading. So I think for the person who was asking about money-back guarantees, you can see my sincerity when I'm giving you. I think if you would attend maybe about 4 or 5 of these presentations, you could probably take the information I give you and formulate your own trading strategy. So you'd have a free trading strategy after attending about 5 of my free webinars. So that just shows where we're coming from. We always want to give you free information so that you can start using right away. Okay. Martin is saying, how do I buy strategy number 4? Well, right here you can see I would take advantage of that great discount we have, and if you can see Don Jans right there, that's his email. He would be the person to contact. He's our senior sales rep, and he can give you that discount, and you can contact him at his email address right there, or simply give him a call at 310-844-7220. Okay? Remember, that price of $6.95, I believe, is extremely inexpensive because we have members who are trading and making just about that much in a couple of weeks. Now, this is not guaranteed or promised, but we have traders who are doing fantastic with strategy number 4. Not only is that an inexpensive price, but we're reducing it by $200 even more just for the next couple of days for people that have attended. So if you're really interested, I really suggest that you call up soon just to make sure you can, make sure you have that special. Now, in the weeks when I give these other webinars, we have other strategies on special. So, or sometimes we won't even have a special. We'll just be telling you about our website. So, there's a lot of different ways to take advantage of what we just had today. Okay. Is it all downloadable? I am in Australia. Yes, everything is basically on the internet. So you come to a password protective website just for you where you get all the information in videos. And also you get my email address. I will be emailing you and answering any question you may have. So if something doesn't make sense or you do not understand why a strategy signal was given, I can explain it to you and go over it. Okay? So there's lots of different ways, and I'm with you there every step of the way. Okay? A lot of the times I'm taking the same signals that we're giving for people. So there's lots of different ways to make sure that you understand. I even email people over the weekend, so there's no way to feel that you're ever out of touch with us. Okay? Any more questions while you still have me here? Once again, we give these just a couple of times a month. Each time I try to give you a different technique or something to hopefully help your trading. But if there's anything I can answer right now, the only thing I would suggest is use this technique, but paper trade it while you're using it. Please do not just jump in with both feet first and say, oh, you know, I understand it. I saw Steve's webinar. I'm going to start trading this tomorrow. No, it's not meant for that. We want to teach you how to use these things. So paper trade, whatever I've shared with you today, and in coming weeks, whatever I'll share with you in the future, always paper trade first so that you fully understand the process, okay? Then you may see after paper trading for a week or so that it's not for you, that maybe you want something a little bit more conservative, maybe you want something more aggressive, okay? But stick around and we'll give you a new lesson each and every time we speak. All right, well, if there are no further questions, I want to thank all of you for coming again. Great questions, and look forward for us coming and having another presentation roughly in 2 to 3 more weeks where we'll give you another tip and another technique and something to elevate your trading. Thank you so much, and once again, if you want to take advantage of that certain special we have, remember to call Don Jans at 310-844-7220, or you can email him at donjans@protraderstrategies.com, and be sure to tell him that Steve Primo sent you, and he'll give you that great discount, that current discount on strategy number 4. Thank you so much. We shall see you next time. Bye-bye.